Today was not a good performing day for myself. Today I lost over $2,000, but at one point in the day, we were down over $4,500. I did overtrade a little bit today. I didn't make stupid trades. I was still trading the 1 minute kill shot, but I traded almost every 1 minute kill shot I saw come into play that we could take. And it was thankfully helpful that I could take up about $2,000 of our losses today. We're still just about break even in the account. We're negative about $150 in the Apex account, but still profitable in our Top Step account. So today, there were so many trades and it was just a terrible day of trading for me that instead I'm going to break down a 1 minute kill shot that happened today on NASDAQ that was pre-market, that was excellent. And I was super bummed we weren't able to take it because it happened before market open. And I'm going to show you the exact breakdown of what is my 1 minute kill shot, how do you spot premium and discount, and how do you know when to take a trade and where to spot take profits. Okay, so ignore the price action to the right hand side of the screen. Ignore that for now because that is post the market opening. The market opened right here at this candle. Or no, sorry, this really big, large red candle here. This is where the market opened today at New York time, 9:30 a.m. Now, I'm going to show you a 1 minute kill shot that's set up in this impulse range here and how you could have caught in this trade if you would have taken it pre-market. So immediately what I notice is this leg of price action, right? That has yet to see any kind of retracement. This is a impulse range. I know a lot of people in my comments on TikTok, Instagram, YouTube have been asking, how do you know where a range is? How do you know where premium and discount is? This is a great example. You have this impulse range. That price has yet to come down into discount. It got close over here, but never tapped into it. And then you have key footprints down here that you could target if you're looking to go short. And right in this impulse leg, anything in this red that is above the 50% line is premium. So when you draw out the Fibonacci retracement, right, you steal these settings right here. These are my exact settings for my Fibonacci retracement tool. The colors don't matter. It's whatever color you want. What matters is anything above the 0.5% line is premium, and anything below the 0.5% line is discount. Okay, steal those settings. I don't care. Utilize them. Use them to your benefit. Now, we have this London high here that formed at this high here. And look what price did. Let me get my drawing tool. Look what price did right here in this leg of price, right? We had this high here, high right here. And look at how we have all these wicks that are on top of each other in this leg of price. When we zoom in, we're going to zoom into this high here on the 5 minute time frame. Oh, we're going to zoom into this high here. Remember, to our left is the premium range of this impulse range in the premium, and it's also a session liquidity of London high. So let's zoom in and look at what there was many opportunities you had to enter in this trade pre-market. Okay. There was not only one wick, there's 2, 3, 4, 5, 6 wicks that failed to close above London high and rejected off of it. So when we see prices in a premium, prices at a session liquidity, sweeping highs, right? These highs to our left here and failing to displace above them, that is a signal that the 1 minute kill shot is setting up. So let's focus in on this leg of price right here, where this first sweep of liquidity happened right here. Okay, this red candle right here. We're going to drop down to the 1 minute time frame. So on the 1 minute time frame, it looks a little different. This is that same leg of price before market opened, and it looks slightly different. But what I do see here is on the 1 minute time frame, we have some fair value gaps. We have a fair value gap down here. And let's see which one it actually inverted. Okay, we have this fair value gap. Let me first see. Let me stretch it. Okay, that one got inverted before the sweep of liquidity. So we're going to wait on that one. And I think it is, let's see, does this one get inverted? This fair value gap on the 1 minute time frame gets inverted on this 8:33 a.m. candle Eastern Standard Time. So the setup would look just like this. Your entry goes as soon as that candle closes. Stop loss goes to liquidity sweep. And now we're going to figure out where are our targets on this trade. For me, before any time I execute a trade, I need to have clear targets of where I'm going to take profits. Okay. So for me, immediately after I see this entry, This is the first take profit, this 5-minute low here. And then a second here. So the first take profit would be this 5-minute external range liquidity, which external range liquidity just means it's a low, a 5-minute low. Then my next target after that would be this 5-minute low just below this one. And for me, just so you guys are aware, if you're on my live streams, you would know this, but when I take a trade on NASDAQ or gold, I use 3 contracts and I always target 2 take profits and leave 1 contract running. So if we get a crazy move like this one here, I can capture that little bit of extra profit that one last contract holds for me. So as you can see here, price choppy, pretty choppy before the market opens. Immediately after market opens, we get a massive displacement candle to the downside to hitting both of our take profit targets, these 5-minute external range liquidity. Now you have that one contract that's floating. And for me, I like to follow on 5-minute displacement candles. So for me, I like to watch as 5-minute time frame is displacing and leaving large candles. That would be where I trail my stop loss. Now, there's a lot of places you could have trailed stops. It could have been here. You know, it could have been when you start getting this order block here and you get stopped out. But either way, you're getting a lot of points out of this trade this morning. And I wanted to showcase this one. Even though I didn't take it, I want to show it because it's a great example, like a picture-perfect example of what a 1-minute kill shot is. The bummer thing for me, it was pre-market, so I don't take trades pre-market. So it is what it is. There's always going to be another trade opportunity, but I want to show you what our P&L was for the day. We were down $2,263.62, which in each account we read about $150 for the week. So if we can capture a pretty good trade tomorrow on our account, like a $200 to $300 trade, win, then we'll be green for the week. So hopefully we can do that. We're not going to force trades. We're not going to execute poorly. We're going to wait for our setups to happen, and then we will take the execution if it comes. If it doesn't, oh well, we end the week red, but nothing we can't recover from. Well, I hope this explanation of my setup, the 1-minute kill shot, is super helpful for you guys. I hope the understanding of what premium and discount is, impulse ranges, how I spot my take profits, and where do I put my stop loss. I hope that all was helpful so you kind of understand when I'm on my live streams and you guys join me while I live day trade, why I'm taking trades, what I'm looking for, and how I execute. Leave a like and leave a comment of what did you make today on your trading session. And subscribe so you never miss one of our live streams or any of our videos we create. I'll see you tomorrow morning, Friday at 9:30 a.m. Eastern Standard Time when the market opens for our live stream.